What's up guys, Trader CJ. We'll talk about order flow in the market. Order flow trading, a technique that's very old, I would say. It's from the actual core of trading, where it's actually come from. So order flow analysis, according to Google, and the definition of that is a technique used to anticipate changes in the price in the market by observing the flow of constantly changing orders of various sizes, or other words liquidity, and the aggressive trades or transactions to view their impact on the market price. So I would say back in the day when people used to trade on the floor, that's where actual order flow can see and hear it on the floor, on the New York Stock Exchange or the CME, Chicago Mercantile Exchange. That's where the actual trades took place, and you can see the aggressiveness or the pulling or stacking of orders and the volume going through in the market. So nowadays most people just look at the candlestick chart or even a line chart, so they claim it's order flow. So looking just at this normal candlestick chart, I won't say it's probably like 10 or 20% from what actually happened in the market at that specific price. So obviously you can see whether the price went up or down. So for example, in this case, if the candle is blue, the market opened at, for example, at this price and went up in that specific time period. So this is a 30-minute chart. So that's some of it in terms of order flow. So I want to go a bit deeper. I won't say it's advanced. For most people it might be advanced, but it's the actual order flow, the market. So I'll show you actually on a chart as well, the footprint chart, where you can actually see what happened in that candle. So let's just move back to this depth of market, or the ladder, some people call it. So this is two different markets. On the left hand side it's the 10-year bond, and this is the ultra bond. Let's use the 10-year as an example. So on this blue side it's the bids. There's two columns. This column is the actual bids in the market, the orders waiting to be filled. So bids of you, for example, that's a limit order. If you want to buy at market and you're going to put in, let's say for example, put in order at this 200 level, you're going to put in a limit order there, waiting for the market to come to you to get filled. So if you put in one contract there, it's going to change this 285 852. So that's adding one contract to this volume sitting there waiting to be filled. So if you put in one there, on this column, this side is going to show a 1. So that's adding or stacking bids on this specific price. So if you look at this here, you will see there's a minus 1598 contract has been pulled from the bid side. So some of the orders were cancelled or pulled. So for example, in some cases it's either traders or the algos pulling their orders. They don't want to get filled on this specific price. And it tends to be something like, if you don't price at this, if you think this is not a fair price and you want a lower price to get filled, you're going to pull your order and wait for a better price to get filled. So I would say that's where, if you can see there's a minus and guys are pulling the bids, you also want to pull your buying order. You want to move backwards or move down and see where you can get a better price to get filled. So on the opposite side you will see the offers on this side, the actual orders, offers or ask price. You will see the orders getting stacked there. So there's 678, 680, getting more and more getting stacked on the offer side. so they want to sell more, so the pressure is on the market to move downwards in this case. So that's order flow. So you can see just looking at those two, the orders getting pulled or stacked, you will see the momentum in the market, where the price is actually moving. Is either going to go down or up. So in this case, there's some pressure on terms of the selling, so the actual fair price of trades going through would be lower, I would say. So if you see this, for example, you would just move down and rather short, or if you want to buy, maybe just move backwards again or down a bit and waiting for the momentum to shift to the upside if you want to buy. In some cases, people like big institutions, they want to actually buy into a selling market, so they would just leave their orders there and getting filled on the bid side and actually adding to their position, increasing the position. So they prefer a more pressure or selling pressure on the market to actually just get their orders filled. But for us, for retail traders or professional traders who want to actually trade momentum and make intraday money, they want to just wait for the momentum to trade with the algos or trade with the momentum in the market, and just want to see what's happening in the market, the actual price, what's happening. So you can also see, so in the middle there's the red, that's the actual time and sales, the actual orders that went through in the market. So if I want to move this is a time and sales, the actual trades that went through in the market. So you can see there was buying, there's 3 contracts sold there on the bid at that price 220. So there's some more selling, you can see 249 that was being sold at 220. So that's selling pressure. So you can see the orders, the bids are pulling, the actual selling on the bid, they're hitting the bid side at 220 and 250. So that's a nice way to see the momentum. So there's also some buying as well that's going through. So these are the actual selling of contracts on the left hand side, and this is the buying of the contracts at that specific price. So at 220, that was sold, that was bought. So there was more contracts bought at the 220 price level. So it says 726 contracts that were bought there. So there might be a shift in, or like some guys taking profit either from their short position, or they're gonna try to push it up a bit. So this also, the bids are still pulling at this 215 price. So combining this information with the stacking and pulling of orders, you can see the momentum in the market and try to trade with that. So you can actually, in this case, maybe try to sell a bit. I'm just want to wait to see, for example, this the price that's been traded in the middle here, what's happening, what's the reason. So you can also clear that in this case and see what's the recent information you can see in the market, the most recent ones, and you can make a decision from there to see what's happening. So that's the actual order flow. Alright, so moving on to the footprint chart, I want to show you guys what's happening in a specific candle. So I'm just going to move this away, and then we can change this normal candlestick chart to a footprint chart. So show in the last 5 minutes what's happening, or just make it 1 minute and apply that. I'm just going to show it. I'm going to turn off this mode. Okay, so this is a 1 minute chart. That was the opening price of 200, and the closing price is currently there. So if this updates, I just want to see if it updates. So that was sold on the left hand side. That was sold. So there's a down pressure on that side. So it's showing the delta in terms of the candle. So all of these settings you can change. but that's happening in the market. So there's 48 bought there, so it's trying to push up this candle, making it blue again. So that's what's actually happening inside a candle. There's buying and selling pressure in this candle, amount of contracts sold. So the candle doesn't show an amount of volume on the actually that went through on the bid side or offer side. So it normally just shows volume that traded. So that's the total volume that traded in that time interval. But if you look at the footprint chart, you can actually see if but sometimes what happens if the market's very thin, you will see a big candle like this candle, but you're not sure how much contract that's actually been sold in this candle. So it just might have been contracts being pulled, so there wasn't like a thin liquidity, very light liquidity, and just hitting a couple of contracts on the way down, and then buying a lot of contracts, trying to buying it up, and just then again the pulling of orders. So you won't see the pulling and stacking of orders inside this candle. So you just see there was like a huge red candle. So it can mean a lot. So that's why I think it's better to zoom in to see what actually happened in this specific time interval. So yeah, that's basically order flow, or some people call it advanced order flow, but that's looking at those types. So there's a lot of tools you can use to improve this and make things better for yourself, to see where do you want to enter. So you still need to use money management skills to take a trade. So, but just trying to look at this, we saw previously, we saw a lot of pulling of bids, stacking of the offers. So you can see the price just moving down from 220 all the way down to 200 now. So on the left hand side here, you can see the actual contracts that went through at this specific price. That's the total volume. So on a specific price, so that's the market profile. So you can see this low volume nodes. So this 240, 235 price level, that's a low volume node. You can see the maximum contract traded up here. So using this with this order flow, you can see what happened in the market at a specific time. So I know there's some markets, or some instruments like the Nasdaq and other instruments that's very I would say volatile and very fast, and the market is just whipping up and down, so it's not easy to read order flow. So I know more liquid markets like the ES and these bonds, you can actually just see what's happening in the market and look at order flow. Even the guys trading the stocks or equities, you can just look at order flow and see what happens in the market. Guys are buying or selling in the market. So I hope this helps you guys. I would say this is a pure way of trading. If you used to trading on the floor, I think most guys should just prefer looking at the actual what's happening in the market. So how many orders are sitting there on the bid and offer, and if there's some interest in the market. So for example, what I've seen recently, well, sometimes if there's news coming out like ISM non-manufacturing news at this specific time, the algos are pulling the orders, I would say offers and bids, putting all their orders. It's getting very thin in the market. That's why most people complain about getting slippage in the market when they put in market orders. But you can see the actual orders from, like for example, now they're setting 2,000 on the bid. Yeah, when there's news coming out, all the algos are pulling the orders. It's getting like maybe it's sitting 200 or even 100 on this. So it's getting a tenth of the volume sitting in the market. So that's why most people complain about getting slippage. But if you see the order flow, you would know this news coming out, and you would just be careful of getting slipped in the market. Alright guys, I hope this helps you guys. There's one other thing I want to show you guys. So TakeProfitTrader is still running this 40% off, no activation fees. So if you guys are interested in getting a funded account, you can check it out. There's a link in the description. Check out TakeProfitTrader. There's also some links with Top Step. Still nice deals with them as well. But this, I would say, is probably one of the best. You get this if you pass your account. That's it. There's no more fees involved in getting your funded account from the guys. So, right, see you in the next one. Cheers.